Welcome traders to analysis of DXY dollar index. My name is Vic. Thanks for joining me here. We're going to be looking at dollar index, on higher time frame. What is the plan? And we'll also be looking at the current conditions so that we can find possible trade opportunities in coming week or weeks. And we will also be looking at dollar's effect on other currency pairs. So it's going to be in-depth analysis. Make sure you subscribe to this channel, support this video, and also share it with other traders and trading communities. So I've already posted this on the social media channels. This is the longer term DXY move, and we have been talking about this for now near about 1.5 years or so. We were here around 89. Remember, this market was around here at 89, and I'm looking at monthly time frame, and the entire media was saying that dollar was going to die, it was going to fall down to 79, or even lower than that. But we wanted to go long because our analysis was very, very simple. Our analysis was saying that if you look at multi-year time frame, we were forming a W pattern, and this thing was nothing but a consolidation. So what happened around COVID-19 time, which is around here, is basically market pushed the dollar down, and it reached the previous support level here, which pushed the price back up. So if you look at this entire thing, this is nothing but consolidation going up, down, and up. So the market can still fall down, but you see, we have multi-year W pattern forming, which can push the price into 110 FCP zone, and if it continues to go higher, then it can continue to go to 113 FCP zone. If it goes even beyond that, then we can also look at dollar reaching 127.4 FCP zone. So this is quite a possibility. So this is long-term analysis on the bullish side of things. If the market starts to fall, then what we can expect is that market can come down to mid of this channel here. Okay, so near about approximately 95. There is a bearish case here which can push the market down to 90 as well, because there is a gap left. There are several gaps left along the way. The market has gone parabolic, it has been going parabolic. And if you have been following my analysis, this is what I've been telling at each step. This was parabolic around 93, this was parabolic around 94, then there was another parabolic move around 96 as well. So this has been parabolic for months now, and it can continue to go up like that. So right now where we are at the previous structure level here, and we have also completed a W pattern here. That's why the market is slightly bearish here. The market has started to take a little bit of pause, and we were expecting that. So if I go to previous analysis, let me go to the other chart. So if I go to other analysis, this is where we were looking for a target to be achieved. This chart, I have not changed this chart for months now, and all of these things were already there, irrespective of all the news, what has been happening around the world, what has been released, all the data which was getting released on weekly basis. Nothing works actually. Only thing which actually works is the higher time frame patterns, and if you just follow that, you will notice that it has quite it has reached this particular level very nicely. So what we have, the market has reached this target, and it is taking a pause. It is falling down to retest that previous structure level. So we are back into 102. So the market can continue to fall for a few days, even for a week or so, to come deeper into this FCP zone. But if this FCP, if this zone, this blue zone, right, this is also a structure zone. If you look at this, the previous structure level here as well, if this structure level becomes support, then market can go, it can stay in this range for some time. That's quite a possibility, because it's already little high right at the moment. If the market breaks above this 104.627, okay, and confirms its breakout, then we are looking for an upward move going into 113 level or so, right? This is that FCP zone. Okay, we will have to probably reanalyze it once the market has started to move upwards. But right now, in coming week or so, what we expect is that dollar can actually still fall down. Why? Because first of all, this is an engulfing candle here on weekly time frame, so there can be another week of bearishness here. And then if this structure level here around 102, this structure level or one of these levels here, because you see these levels used to be resistance, now they will act as support. Then we have 100 level as well, which has not been tested. So at any moment in time, like at any of these levels, they can act as support, and whenever it will find support, it will try to go back up into this 104, and if it breaks, then it will try to go to 113 FCP zone. Okay, 111 to 113 zone, and if that breaks, then we are looking at 127. So look for a bearish move into this zone. Okay, and even if you're not trading DXY, it will show the impact on other currency pairs and gold and other asset classes. So let's quickly look into Euro USD and other currency pairs. I will post another analysis on gold, so you should check that out. Gold also started to go up while dollar was going down, because the movement on the bearish movement on dollar is showing up in other currency pairs and other asset classes. So if I go to the Euro USD and show you the previous analysis, this is where we had our FCP zone. The market came right into this FCP zone and started to go up. This was planned like months ago, because if you remember, I posted this higher time frame analysis, which was posted near about a month, actually 2 3 months ago. So what I said that, if 1.1173 was going to hold as a resistance, if I go to the weekly, then I'll show you. If this was going to hold as a resistance on weekly, then the possible intermediate target was going to be 1.04162. So this was good, near about 782 pips move, right? So from here to here. Ultimately, it can still reach this target of 1.016994. But you see, why this market is actually moving upwards, why last week was actually bullish, is not because of Euro USD. It was more of because the dollar was actually trying to fall down. So there was one bearish candle here on dollar, and Euro USD one bullish candle. If I look at the GBP, same thing happening here. NZD USD, same thing happening here. You see, that is why you should always be looking at dollar. Now I will show you, I will obviously post a gold analysis, but you see gold is also going up last week because the dollar is falling down. Okay, so if I go back to dollar, so what do we have, what can we plan? As I said, you should, because we are actually right in this resistance zone here, so you can expect more bearish movement in coming week. Okay, however, the market momentum has been very strong, so ultimately this market is going to go up. Why? Because you see, it is going to go up, it has been going up and like this, and then it is right now in a process of correction. This correction come here, can come here, can come into one of these levels here if deeper correction happens, and then it will start to go back up. Okay, following the previous momentum. If it market actually breaks this and confirms that breakout, then obviously it's going to go up, so it will form something like this correction, and then if it breaks up, then obviously it's going to continue to go up because it is still bullish. And right now, this is where we are. But if this correction becomes a shallow one, then it is quite possible that it will reach 111 to 113 FCP zone and even beyond that. So this is what we have on DXY. If you enjoyed this analysis and found this useful, make sure to hit the like button and subscribe to the channel and share it with other traders and trading communities. I'll see you in the next one. Have a great trading week.